Waiting to get live. Okay, we are live now. Hello friends, welcome to Business Learnings. And in this particular video, we'll talk about Yes Bank. Uh, it has seen quite a plunge, hasn't it? The stock used to trade at uh, 400 rupees, close to 400 rupees, and today it is trading at about 50, 51, 52 rupees, if I correctly remember the last closing price on Monday. Of course, tomorrow we'll see how the market behaves. And promoters are all gone. Rana Kapoor has sold off his stake. Promoter holding is less than 10%, and retail holding is now close to 30%. Guys, at this point, I'd just like to tell you a story before talking about Yes Bank. Uh, if you remember, there was a frenzy of cryptocurrency trading. Everyone is talking about them. Everyone was talking about bitcoins a year ago or 2 years ago when it was in the boom. And the price of bitcoins reached 17,000 USD back in December 2017. And uh, everyone was buying Bitcoin. Everyone, almost everyone. There were exchanges, Coinex, Zeppe, UnoCoin. A lot of exchanges were there, and all of them were offering Bitcoins. They were making a lot of money through brokerage. People were seeing a bubble, but they were not realizing they were in a bubble. People were keep buying, keep pushing the limits, and later it crashed. Why did it crash? Of course, it didn't have any value. And second, there were no, not I'll not say no institutional investors, but uh, there was a lack of institutional investors in that space. And therefore, there was a lot of volatility in the price of Bitcoins because there were a lot of retail investors like us, like common people, who who used to, how do I say, they their reactions were spiked. A little bit of noise will come out, the noise, a little bit of news will come out in the favor of Bitcoin, and the prices will see a uptrend of 20, 30, 40, 50%. Bitcoin as well as other cryptocurrencies, Ethereum, Bitcoin Cash, Ripple, Litecoin, Dogecoin. There were a lot of them. There are a lot of them, thousands of them. Ethereum, many of them. Uh, yes. So retail investors, they overreact. What they see there is a key difference between retail investors and institutional investors. Greed and fear, these are the emotions. If you know how to control them well, you will do well in the stock markets. And these are the things that come with disciplined investment through years. Of course, I'm no good at it. I'm still learning, and at the beginning phase I still get driven by these two emotions. But there are a lot of top investors who have learned to control their feelings, their emotions, and they do not overreact. Another day, a news on Bitcoin will come out that government will curb Bitcoin and the price will go crash down to 10, 20, 30, 40%. Is it logical? No, because why the prices crash? Because there are not many institutional investors, and these retail investors, they keep selling off. They see a red line in the candlestick chart and they start panicking because they are not sure what they are holding. They do not have a complete idea of the product that they are owning, that they have paid money for. They have owned it because someone told them that this thing will appreciate. The price of this thing will go up because it has been doing so. Guys, you first have to understand what is the value creating mechanism for this particular product, and you also have to understand if this mechanism is it replicable. If anyone can create a replica of it and just launch it with more features, then maybe popularity of this feature will go off and the other product will pick up sales and popularity. Now, for Yes Bank, a similar thing is happening. Not similar, but the emotions are the same. Why? Because retail investors holding is about 30%, and as I already told you, um, the feelings of retail investors, they are driven by fear and greed. Yes Bank used to trade at close to 40 rupees, and in the last few sessions it has gone up to 52 rupees. Why? I'll tell you. There was a news that Microsoft and there was some one more major player who was, they were interested in buying stake at Bitcoin. Now, of course, if these companies buy stakes, uh, I'm not sure about the companies, but there were names of two people, some Mittal and Sunil Mittal, I think. It was floated that these people are interested in buying stakes in Yes Bank, and of course, these are well-named people, institutional investors, and if they are interested, there must be something good in it. And if Paytm has plans to invest in Yes Bank, there must be something good in it, because Paytm is also held by Berkshire Hathaway, has also invested in Paytm, and Warren Buffett backs Berkshire Hathaway. Therefore, Paytm must be making good decisions. This much of information, and retail investors go to the market. They have a demat account. They start trading. They start buying. The first rule of investment is you need to learn what is the product. And I've recently started learning about banks, and you know it's very complicated. It will take a huge amount of learning for me to understand how do these banks work, to later to know how to value them. And yeah, so the enhanced emotions of these retail investors, they saw a news, a positive news, probable positive news, that this is going to Yes Bank. People are interested, good people are interested in buying stakes in Yes Bank, therefore its price must appreciate. And since it is already down by about 400 to 50, about 90%, 85%, it is already down by 85 to 90%. Therefore it cannot see more downtrend, and therefore we should buy it. This logic is not enough, and there are countless examples where these falls never stopped. I'm not saying that Yes Bank will collapse today or tomorrow, in the coming days. I'm not sure about it. I do not know it. Uh, there is a rule of Warren Buffett. If you want to speculate, and this rule is given by the teacher of Warren Buffett, who is Mr. Graham, and he was a well-known investor, and Warren Buffett learned a lot from him. And he used to say that speculation is our intrinsic urge. We want to speculate. There's a difference between investment and speculation. Investment is all calculated. You understand everything what is going on, and there's a least amount of unknown in the equations. But for speculation, you just want to gamble out your money. You are not very sure about things, and it's very close to gamble. You just know that it might go up, it might go down, but you cannot justify it with solid collection of reasonings. Okay, so yes, so Graham used to say that uh, speculation is our natural tendency. It's intrinsic to us and comes naturally to us. Therefore we should speculate, but we should not speculate with all of our money. We should set aside 5% of our total funds, 5% of our total investments, and maybe play around with it, maybe do some speculation with it, but not more than that, maybe less than that, but not more than that. That way, it will also satisfy our intrinsic hunger of speculating and gambling. And on the other hand, it will also save our 95% of the corpus, which could be invested in well-known companies. Invest in a lot of companies. There are a lot of good companies, and I'll also make videos about it. I'm very privileged to study in IIM Lucknow, and we have a subscription of Bloomberg as well as Thomson Reuters, and they provide a lot of resources to learn about a company, to go deep, go deep and research about the company. We have the reports of various brokerages which otherwise sell in the market at 100, 200 to up to 7 to 800 dollars. We have the summary of them, and we can go through them, understand it. I'm privileged to that. I have that information access to us, access to me, and all these students here. So maybe I'll try to use some of the data points, and try to make videos of the companies. And yes, uh, that was all for this video. So I'm sorry I digressed a lot from the main point. I talked about everything a lot. The main point was, yes, bank, should we buy at this point? If you want to speculate, yes, go ahead and buy. If you understand the business model, if you understand the earnings potential, if you know how yes bank is will be earning for the next 10 to 15 years, if you have such information, of you have clear understanding of what is going to happen, great, go and buy. I do not have, therefore I will probably not invest in it unless I want to speculate. And if you want to speculate from that 5% of the money, if you want to play around, maybe you can try. Thanks for watching this far. And yes, if you like the video, please press the thumbs up button. Next videos will be probably be more structured and more towards. I'll try to find some small cap and mid cap companies which have taken the toll of these this bad times, this economic crisis times, and maybe they are good. They are a good value. I'll try to cover them in the next videos. Till then, bye. And yeah, if you liked it, please press thumbs up. Any questions, please put in the comment box below. And if you do not want to miss any of the updates, then you can always subscribe and press the bell icon. Thanks for being with me so far. Bye.